Welcome back to the Pro Ticker Podcast, your Monday morning edition covering major financial magazine headlines, everyone.
Sounds like it's going to be an interesting one.
Yeah, we're doing a deep dive today into some global market reactions to President Trump's tariff announcements.
Oh, yeah.
We've got a stack of articles here from Bloomberg Market Watch,
Mm-hmm.
even a peek into China's demographic situation. Should be interesting.
Sounds like a busy Monday morning. Where should we begin?
Well, Bloomberg is leading with Trump's plan to slap a 25% tariff on all steel and aluminum imports.
Ah, yes, the tariff.
These are definitely sending ripples through the markets.
For sure.
Everyone seems to be a little jittery.
Yeah.
The one thing I found interesting is there's a real debate brewing among analysts.
Okay.
Bloomberg highlights how some think these tariffs will boost inflation, while others are predicting a demand slowdown.
It's tricky, isn't it?
Yeah.
On the one hand, tariffs make imported goods more expensive,
Right.
which could push prices up. But if things get too pricey, consumers might just hold back. Leading to that slowdown, a Bloomberg article covering the immediate market reaction points to a strengthening dollar surging gold prices and a weakening yen and Canadian dollar.
Okay.
This suggests a flight to safety and some serious concern about the potential inflationary impacts of these tariffs.
That makes sense. So are we on the verge of a full-blown trade war? Market Watch seems to think so, highlighting a lot of market uncertainty and nervousness surrounding Trump's policies.
The potential for a trade war is a legitimate concern.
Yeah.
These tariffs on steel and aluminum are just the latest in a series of protectionist measures.
Yeah.
It will be interesting to see how other countries, especially China, choose to respond.
Right.
Retaliation could definitely escalate things, which would be bad news for everyone.
Definitely. Speaking of China, Market Watch paints a pretty bleak picture of their economic future.
What's happening in China is certainly cause for concern.
Yeah.
A major factor is the widespread youth unemployment and financial insecurity highlighted in a Market Watch article. These issues directly impact consumer spending and could create a ripple effect throughout their economy.
It sounds like they've got a lot on their plate. Market Watch also mentioned that China's government pension system is projected to run dry by 2035. Isn't that alarming?
It is, and this issue ties directly to their demographic challenges.
Yeah.
An aging population and shrinking workforce are putting immense pressure on their social safety nets. This situation, coupled with the economic anxieties young people are facing,
Right.
paints a difficult picture for China's future.
It's interesting how these seemingly separate issues, tariffs and China's economic woes, are actually interconnected.
Absolutely. Globalization has woven intricate connections between economies.
Yeah.
Actions taken in one corner of the world can reverberate across the globe.
And to make matters even more complex,
Yeah.
Bloomberg mentioned plummeting marriage rates in China. I can't imagine that helps their demographic challenges.
You're right to connect those dots.
Yeah.
Fewer marriages mean fewer births, further shrinking the workforce and exacerbating their demographic crisis.
Wow.
It's a feedback loop that's difficult to break out of.
Okay, so we've got trade wars brewing and China facing some serious challenges. It's enough to make anyone nervous. But amidst all this gloom, I found a surprising bit of optimism in a Bloomberg article.
Oh, yeah.
It seems like companies are mentioning AI adoption in record numbers during their earnings calls.
Now, that is an interesting observation. While everyone's fixated on the negative,
Right.
this AI surge could be a sign of exciting times ahead. It's not just the Magnificent Seven tech giants anymore either. AI is gaining traction across diverse sectors,
Okay.
from finance and media to even consumer services.
Really feels like a turning point.
Yeah.
So is AI the silver lining to all this economic uncertainty?
It has the potential to be. Increased AI adoption could lead to greater efficiency, innovation, and even economic growth. However, it's important to remember that AI is still an emerging technology. There will be challenges along the way.
So you're saying we should be cautiously optimistic about AI's potential impact?
Exactly. It's crucial to stay informed and assess AI's development carefully.
Right.
It's a powerful tool, but its ultimate impact will depend on how it's implemented and integrated into various sectors.
Well, it definitely gives us something positive to think about. Now, shifting gears a bit, let's talk about the bond market. Despite all this economic turmoil, Market Watch points out that it's been surprisingly calm.
Yes, the bond market stability is quite remarkable,
It is.
especially considering all the uncertainty swirling around us.
Yeah, I have to ask, what's keeping the bond market so steady?
One factor is Treasury Secretary Scott Bessent's efforts to manage government debt and reassure the market as reported by MarketWatch.
Okay.
He's signaling careful management of bond issuance, which helps ease concerns about a potential supply glut. Additionally, the most significant shocks from interest rate adjustments might already be behind us. The Fed's actions have created a more predictable environment, reducing the potential for sudden and dramatic moves in bond yields.
So we could say that the initial storm has passed,
Right.
and the bond market is settling into a new equilibrium.
That's a good way to put it. Of course, ongoing global events will continue to influence the market, but for now, there's a sense of cautious optimism.
It's interesting how the bond market seems to be telling a different story than the stock market.
It often does.
Right.
Remember, the bond market tends to be more focused on long-term trends and stability, while the stock market can be much more reactive to short-term news and sentiment.
All right, we've got tariffs, a mixed bag in China, a potential AI revolution, and a calm bond market. What else is on the docket for today's deep dive?
Well, we haven't talked about the UK yet. They seem to be having quite a different experience than China right now.
Oh, that's right. Bloomberg was reporting a surge in retail investors buying up UK government bonds, or gilts as they call them. Apparently, it's the highest purchase rate in 4 years.
Yeah.
That seems counterintuitive given all the global uncertainty.
It might seem that way, but it actually highlights how investors are reacting to these turbulent times. When uncertainty rises, some investors seek refuge in assets perceived as safe and stable, like government bonds.
Right.
The jump in UK yields at the start of the year, as reported by Bloomberg, has made gilts more appealing, especially with the added allure of a unique tax advantage for wealthy Brits investing in low-coupon gilts.
So is this a case of investors looking for a safe haven amidst the storm?
Precisely. The UK, despite its own set of challenges, is viewed as a relatively stable economy. And this rush to buy gilts is actually impacting the market in interesting ways.
How so?
While this high demand has made certain low-coupon gilts quite expensive,
Okay.
prompting the UK government to offer more of them to take advantage of lower financing costs.
Oh.
It's a win-win for the government and investors looking for a stable, tax-efficient investment.
So we've got China grappling with economic anxieties and a demographic crisis, the U.S. stirring up trade tensions, and the U.K. experiencing a bond-buying frenzy. What a whirlwind.
It certainly paints a picture of a global economy in flux, doesn't it? But amidst all this uncertainty, it's important to remember that markets are cyclical. Periods of volatility are often followed by periods of stability and growth.
That's reassuring. But I keep coming back to this AI surge. It feels like more than just a blip on the radar. Could it be the catalyst for a major economic shift?
The potential is certainly there. If you recall, we were discussing how AI isn't just for tech giants anymore.
Right.
Bloomberg's analysis of company earnings calls shows that AI is making its way into finance, media, consumer services, and even heavy industries.
And analysts are predicting that this broader AI adoption could actually narrow the earnings growth gap between those magnificent 7 tech giants and the rest of the S&P 500. That's a pretty bold prediction.
It is, but it underscores the potential for widespread economic impact. AI could drive efficiency, reduce costs, and even create entirely new industries. It's a development worth watching closely.
So while tariffs and trade wars might dominate the headlines today, it seems like AI could be the real story unfolding in the background.
Precisely. It's important to look beyond the immediate market reactions and consider the long-term trends shaping the global economy. And AI is undoubtedly one of those trends.
All right, so we've covered a lot of ground today. From trade wars to AI's emergence, it feels like we're witnessing a pivotal moment in economic history. But before we wrap up, I want to go back to something you mentioned earlier about navigating uncertainty. What advice would you give to our listeners who might be feeling overwhelmed by all this news?
That's a great question. First and foremost, remember that market volatility is normal. Don't panic and make impulsive decisions based on short-term fluctuations.
Right.
Instead, focus on your long-term investment goals and maintain a diversified portfolio that aligns with your risk tolerance.
So stay calm and stick to the plan.
Exactly. It's also crucial to stay informed, but be discerning about your sources. Stick with reputable financial publications and avoid getting swept up in hype or fear-mongering.
Solid advice. Anything else our listeners should keep in mind?
This might sound cliche, but it's always good to remember that challenges often present opportunities. The global economy is evolving, and those who adapt and embrace innovation will be best positioned to thrive.
Absolutely.
Yeah.
And who knows, maybe some of those opportunities lie within the very trends we've been discussing today.
Yeah.
Perhaps AI holds the key to solving some of the economic challenges facing China.
All right.
Or maybe it will drive the creation of new industries that will reshape the global landscape. It's exciting to think about the possibilities.
For sure.
So as we wrap up this deep dive into the world of global markets, what's the one key takeaway you want our listeners to remember?
I think the most important takeaway is to embrace a balanced perspective. We've seen both anxieties and opportunities at play today. Trade tensions and economic uncertainties are real concerns, but so is the potential for innovation and growth, particularly in the realm of AI. It's a complex and dynamic landscape out there, and staying informed and adaptable will be key to navigating the road ahead.
That's excellent advice. Thank you for joining me on this deep dive.
Of course.
It's been a fascinating exploration of the global market forces at play.
My pleasure. It's always a stimulating discussion.
And to all our listeners out there, we'll see you all tomorrow morning with new headlines from major financial magazines.